So coming back to plastics recycling, now that both of your companies have been in there, right? I guess how do you see the challenges? Do you feel like this is a good segment with these companies that allow you to scale it further and lead to successful exits, or do you? I think it's fair to say. Let me explain where I'm coming from. I think it's fair to say that the question on feedstock availability was underappreciated by pretty much everybody who was looking at this space, let's say 5 years ago, right? I think it's come into sharper relief in the last couple of years that there just isn't the feedstock available. There are all these commitments, but where is the feedstock to kind of get there, right? So I'm curious, like, has your enthusiasm for the investment thesis changed once you've actually seen these companies in your portfolio?
So I think that with our U.S. recycler of LDPE, it's a great business, but it's exposed pretty significantly to virgin LDPE pricing dynamics, and there's a disjointed nature with bale prices versus that virgin resin. So virgin resin pricing might fall 30 cents a pound, and bale pricing changes, less than 1 cent a pound. So it significantly impacts their margins, and that's tough. And so I think that's caused us to significantly rethink how we're segmenting our customer base, and probably in the long term, like pricing mechanisms as well. With the European recyclers, I think those feedstock markets are more robust, and so there it's really just optimizing within like your supplier network. But I think it's remained consistent. Like we're still planning to double to triple expansion at each of those operating facilities we bought in Europe.
Okay. John?
Yeah, I'd answer your question by just acknowledging the historic volatility in unit level economics of a pretty fragmented recycling base in the U.S. So, for example, Evergreen Recycling, it's now a combination of formerly bankrupt assets that were bankrupt because of said volatility. Another business, one that we carved out of an existing portfolio company, but now the business is 4 times the size as when we started off and when it was a captive recycler. It's not the only instance of a captive recycler which doesn't always behave like a rational participant in the market, be it bale pricing or how they're selling and pricing their goods externally. So in saying all that, the role of capital providers in PET and HDPE, for instance, is by building some scale of the existing recycling businesses so as to then establish more stable unit level economics with the ultimate customers. So when the PepsiCos and Coca-Colas of the world look at their target recycled contents, it must mean that it has to come with more stable economics flowing through the value chain. Otherwise, folks like us won't make the investments to support what needs to happen in order to do that, setting aside everything on the ultimate supply side of feedstock. So I guess I say all that. I think it's been ultimately really helpful to build scale in the U.S. markets in particular to sort of retrain the ultimate customer base and really just professionalize it from mom and pop individual recycling businesses to those that look and feel more like tollers and not as exposed to the whipsawing intake and output market pricing dynamics.
So I guess what I'm hearing is that there is the intent to continue to look for opportunities to scale and consolidate in that space for your portfolio.
Yeah, for sure. We've done just that inside of the companies I've mentioned. I'm sure, Katy, you've got similar experiences. At least for us, it's less about, in those two particular, in HDPE and PET, less so about new platforms and more about continuing to build scale through the existing platforms we have.
I'm presuming Ara is a bit different, right? I mean, you guys are looking at doing that, but you guys are also open to just interesting new technologies, or?
Yeah, I mean, typically when we're evaluating new technologies, there needs to have already been a very successful pilot at the earliest stage, or a small commercial facility, maybe that's undersized, needs to be built greater, but has customer traction and the ability to sign contracts for offtake. Yeah. And that's something we've definitely increased more with, for example, BioVeritas, as we look to build their first commercial facility, the customer offtake is a critical milestone in order to move forward with that. But they have a market demonstration unit outside of College Station that's been running for a number of years, 5+ years. So it has a lot of data and samples it can produce for customers, et cetera.
So when you look at new technologies in and around recycling or waste to value, or even more broadly chemicals and materials, are you excited by something that you see?
Yeah, definitely. I mean, I am looking at, other than the investments I mentioned, I've closed one other innovative materials company. It's actually on the earlier side for us, but has just a vast applicability to various markets, whether it's replacing microplastics in laundry pods or plastics in diapers. It's, I'd say, a longer term play on that, but many different applicable markets where I think there's a higher willingness to pay from end consumers who care about sustainability, or it's just a lower portion of the total product cost. Also right now looking at it's not plastics related, but an advanced materials company where there's 100 years of company history, hundreds of patents, very strong barriers to entry through that, and long customer relationships, 20, 30-year customer relationships that give us confidence in this company's ability to scale outside of their current operations. And so that's we're looking for greater visibility on both customer demand and unit economics as we look to invest in a growth platform.
Okay, and is that because you guys are raising more capital, and obviously, right, I mean, as you raise more and more capital, it becomes challenging to find companies that will allow you to get the target return. So therefore, the criteria is becoming a little more narrower, or?
Well, I think we've seen with some of our earlier stage process technology rollouts, there's quite a band and variation in what these plants ultimately cost. And so if we're going to invest in one of these now, we need to have great conviction in what customers are going to pay for it, and how much the facility is going to cost, what its operating costs will be, et cetera, especially in the current economic environment.
So, John, where do you see these, 2 or 3 investments that you have made, and presumably you want to scale them? Like, what's the timeline that you guys are thinking of in terms of holding these assets, and or is that timeline any different from what your target time frame looks like for other investments in your portfolio?
As a general statement, we don't treat our recycling-oriented businesses any differently as it relates to return objectives or time as we would any other. And so that, to make some general statements, 5 or 6 years is the average investment hold for us, and we've obviously got our investment hurdles to deliver against for our limited partners. But we've been active in a number of different investment themes that we continue to remain excited about. Just to hit on your question, beyond just the investments that I mentioned.
Yeah, and
so for example, engineered
I'd
materials.
be interested in hearing that too. Yeah.
Yeah. So for example, in the realm of building products, we're big believers. I'm a former engineer, as several of my colleagues, or many of my colleagues are, who work in building products. But there are a whole host of really interesting applications of plastics-driven, innovative materials. And the world of building products is very, very legacy material driven, right? So if you're here in Houston, all of us have ornamental iron fences, and it makes absolutely no sense because they rust, they're exposed to continuous moisture. We use a lot of cedar fence, and yet in other parts of the market, if you go to Florida or the Northeast, PVC fence is there, right? So there's another mechanical recycling market, which is not without its complexities given its PVC, but there are people doing it profitably, and there are those like AZEC, who's a publicly traded company, that do some really interesting things in that space. So that's just one very narrow niche of fencing. We happen to own a fence distributor, and so we believe through distribution, we can help identify the next technology that may be driven and then distribute that, and we're also looking on the manufacturing side. So we think there's a lot left to explore and invest behind in engineered materials within building products. And I'd say the same thing on packaging. There's a lot of businesses that are perhaps family owned and have been around for 100 years that are frankly quite blind to the to some of the pages you put up there earlier as it relates to the ultimate end customer demand for recycled content. They're using 100% virgin, and they say, well, this is all a bunch of ESG nonsense. We don't need to focus on that. And it's to their detriment, but it means folks like us who are looking forward 5, 10, 15 years have an opportunity to invest behind them and help shift the direction. So a lot of that's going to be the case in the packaging side.
Okay. So how do these segments benefit, if at all, from IRA or some of these other policies that you're seeing? Maybe in Europe, I don't know if any of that is supportive. Does that provide some tailwinds to this segment?
We've considered a little bit on if DOE loan programs would be relevant for these portfolio companies. I think they're not the slam dunk fit within at least what I feel like gets a lot of press attention from the DOE. So it's been less of a focus. I mean, there's certainly a ton of EU country level and EU level subsidies that are available, but tend to be relatively piecemeal in nature, and so it's a lot of work to cobble them together.
Yeah.
I don't know. Have you had a different experience with that?
Yeah, we underwrote all the 2 investments that are now 3 companies for us well before the passage of the Inflation Reduction Act. And so anything that kind of falls in our lap would be just that, a windfall, and there's not a whole host of specific things to point to, and we didn't plan on it when we originally set out on it.
I think IRA is certainly causing us to look at, if a platform we have in Europe called Jadara, a gasification platform, makes more sense in the US now. I mean, I spent some time maybe a year ago looking at that, and it was tough to have conviction in the credits and volatility in pricing for these plants, kind of similar to the RPET dynamics. Tough to understand how to underwrite that, and that I think could change with the IRA.